Continuing with Myanmar market, Dr. Ong Thura, CEO and founder of Thura Swiss market research company and consultant, explained that the purchasing power in Myanmar is actually higher than the official data. He believes there are many wealthy people in the country, but sometimes they use grey or black market that the information did not show in official statistics. However, for rural areas, the purchasing power is still low. Entrepreneurs have to set the targeted customers, whether it is upper segment or broad market. To enter Myanmar market, foreign companies need to have good strategy, which means to come and see what the reality is on the ground.
I would say you need to be here. You cannot just because information is not really available in Myanmar. So what you need to do is first come to the market, see yourself what the country is, form your expectations, and also do some groundwork. You need to find out, okay, what is the potential of the market? You need to have some figures to find out, okay, how much sales potential the country has for your product, specifically for your product. And then, depending on this, you can formulate your strategy.
Entering Myanmar market, there are challenges such as underdeveloped banking system, power cut, poor road and transportation, and lack of human resources. The top executive advised that in order to cope with those challenges, foreign investors should first lower the expectation.
I would say first just you form your expectations. If you have the right expectations, you will not be disappointed, and you base your calculations on that expectations. If of course you are calculating your whole business model with the optimal case, and then you are surprised by power cuts, by the high transportation costs, by lacking human resources, then your calculations will be wrong. But you have to do a realistic assessment of the market.
Aside from those challenges, foreign investors still have to compete with established local companies.
Investors coming in kind of as cowboys, so they're expecting, Myanmar will be a quick win. There are not a lot of laws. You can do everything, and that's not right. The market is still quite tightly regulated. You cannot just start any business you want. You need to obey the laws. And for example, especially people coming from the ex-communist countries, like the ex-Soviet Union, and these people think it might be something similar. Myanmar is in a similar stage like when the Soviet Union broke up. That's not exactly true, because Myanmar has already, for example, very established businesses, very successful business people, and also a lot of competitors already. So you cannot just come in and do anything you like. You have to take into account that there are some established competitors in the market.
Mm-hmm. The competitors are mostly local brands, or from where?
Mainly, of course, local companies. Mm-hmm. So they are quite huge. Typically, there are like, let's say, maybe 10 to 20 big companies, and these companies are active in many segments. They have typically an airline, a bank, an insurance company, a construction company. Mm-hmm. So if you want to directly compete with them, it will be quite difficult.
The best way for foreign investors would be to partner with local partners, as they will understand the local market better and know how to access the market. On the way, Tang Mi Sang from Myanmar Focus Daily.